Coming up on Digging into the Future. Most technology companies are hearing about SPACs. It's the new exciting term out there. So welcome to PTC's Digging into the Future, and looking forward to hearing about SPACs. What are SPACs exactly? What's the one-on-one course here?
Sure. So I would kind of present it two ways, Bill. Firstly, it's a group of people, typically as part of an investment organization. Maybe it's an operating company setting up a different arm, but you raise money through an initial public offering, typically in the hundreds of millions of dollars. And you have a period of time to use that capital with investor permission on the back end to identify an interesting, exciting business that is typically then private. And through an M&A transaction, through a merger, you actually take that company public. And it's an independent public company, and at closing trades regular way. Not terribly dissimilar to an initial public offering. So that's kind of general sense of what a SPAC is.
Well, and it might be interesting, Bill, to understand a little bit of this history. Why? And I know you worked with one several years ago, as you mentioned. But the genesis of the SPAC, or the recent takeoff of them, really was around COVID, right? As about a year ago, people were trying to get their IPOs done. Didn't know how to get an IPO done at that point in time because you couldn't go on a road show. And this SPAC product, which was quite niche back then, was sitting around, and people said, well, why don't we go talk to these guys about going public? And that turned out to work quite well. First one got done, second one, third one. And then as these de-SPACs occurred, this wave of SPAC IPOs occurred on the back of it.
Is it largely tech that's going into this, or is it other types of businesses?
When you look at the underlying SPACs, you have to remember the SPAC is a share, effectively, of common stock and a warrant, right? Yeah. And so tech companies tend to have higher vol than other industries, so they tend to be better situated for SPACs. They also tend to be higher growth companies, sexier stories than coal companies and real estate companies that we were talking about earlier. So I do tend to think that that's going to be where the bulk of the action is going to be in the Asian SPAC market. Yeah. And that'll evolve over time. And I don't, frankly, the SPAC product itself, I think, could evolve to be a regular way industries and taking over the market share from IPOs and that basis. But in the near to medium term, I think it's going to be very tech focused.
Well, I think it's across most industries. I think you have to look at industry. I think if one were to think about launching a SPAC and one were to think about the industries that they should be focused on, obviously it should match with their own experience and their own track record, but also where there are industry tailwinds. I think that's incredibly key. And certainly, if one were to look at TNT, my guess is it's probably at least 25% of the industry focus, of most SPAC vehicles, so I should say 25% of SPACs that are out there, maybe even larger. I think the reason is, the industry or the industries, because there are obviously, significant subsectors within TMT, but, very dynamic markets, growing industry tailwinds, a lot of fragmentation in the market still, even though there's been a lot of consolidation in many, and, there's still lots of, very interesting companies that are out there that private that I think public market investors would covet. And so I think you will see, and I think you have seen, I think you will continue to see announcements that are, within, certainly, for example, in communications infrastructure, then in the heart of the space that, you have spent a lot of your career in.
How does research work in these? Because that's one of the other issues, right? So guys think about aftermarket trading and say, okay, what do I get aftermarket trading if I'm in a SPAC? Whereas in an IPO, all the banks are signing up, they give you, research, right? I mean, how do you manage around that? Yeah.
So, first off, from the research perspective, what you really care about from a research is having that, as a management team, having that direct dialogue with investors. Now, given you can file your financial forecasts and you can put out, material talking about your story directly to the SPAC investors, that helps you go a long ways negating the need for research. That being said, you're absolutely right. You do want to have research on an ongoing basis. And the banks that have funded or helped to raise the money for your initial SPAC, they will end up putting research out on you.
Yeah.
And usually there's a couple banks involved in that, and then there might be banks that you have hired as the target that would also want to cover you because they have a relationship with you. So you have some natural research, not quite the same as a traditional bank underwriter, but you are going to have banks that are going to want to cover you. But also that also gets into the size of the transaction. So as you and I spoke about earlier, you really want to be $1 billion plus equity value if you're going to have a U.S. listed company, to making sure you have enough research coverage in you after the fact, and people want to pick you up from a research perspective, and cover you and trade the stock, et cetera.
One other question that obviously, and I know we're sort of, now this is going to the 202 course on SPACs, but the whole de-SPACing versus SPACing, right? The whole, one of the things that people talk about is it's very difficult to get a bank to de-SPAC another company's SPAC, another investment bank SPAC, right? And is that still true? I mean, that was in the early days, that was one of the issues, which was how easy is it to get the support of other investment banks in these deals?
So, I think today it's probably there's certainly an ability to do that. I can, speaking for us, we have had the ability to do that, and I think we will continue to have the ability to do that. I think, having said that, given the amount of teams that are out there that have capital, that have raised their money, created their own SPAC through some of the banks that I have mentioned, and to the degree they haven't announced M&A transaction, that they're under a lot of pressure, to focused on getting M&A transactions done, announcing them, and working with the banks that they have, that have underwritten them. And so I think those firms that have, dozens of teams that they have taken public, I think their focus is predominantly on working with those teams to make sure that they are successful, but also to the degree that they have interesting ideas. They may not marry well with the teams that they've underwritten, but may marry well with other teams. I'm sure that there's availability to do that. Investment bankers that they're always incentivized to identify a new transaction for a new client, so they can have another avenue to generate revenue and get paid. So I think there's still an opportunity there.
The SPAC product, is been very well received for a number of reasons over the last year. First off, the quality of the SPAC sponsor has improved. So you've got very high quality management teams that have spun out to set up their own SPAC, as well as high quality sponsors, and then a hybrid model where you bring a sponsor together with a management team.